Welcome back into Fox 10 Midday. Today, the stock market has been hovering near all-time highs, and for many investors, that feels great as long as things keep moving up and to the right. But for retirees, it's not always that simple. Joining us now this morning is financial advisor Chris Burns to talk about with us this morning. Chris, thanks for being here.
Thank you for having me.
It's good to have you back on the show today. Here's the big question. What is the right amount of risk in retirement?
Well, you don't want to hear this, but it truly depends on what you're trying to do. If these are dollars that you're not using day in and day out for income, you can certainly maybe take a little bit longer term approach and focus more on growth. The follow-up to that is what type of account is it? Right? You would want to be more aggressive in your tax-free accounts versus your taxable accounts. So it's all about, one, understanding the risk, but where is it in proportion to your portfolios?
Yeah, good to know there. You know, that word risk can sound pretty scary, especially once the paycheck stops coming in for those folks.
Absolutely.
So how should retirees be thinking about risk?
And you're right about that. My client's biggest fear is, Chris, look, I've run this race my entire life. I finally crossed the finish line. I'm now retired. What do I do now? That's scary, right? Especially when there's no longer checks coming in. You've said, hey, I'm going to take it from here. The biggest advice that I can give those individuals is understand how much risk you have in your portfolio. I'm not saying are you conservative, moderate, or aggressive. I'm saying what is the percent of risk you have proportionate to an index like the S&P 500, and then that data right there will help you make some much better decisions that are non-emotional. Because being emotional inside retirement with your own dollars is a recipe for failure.
Good reminder there, I think, regardless of your age and demographic, for sure. You know, right now in the month of March with markets near highs, should retirees be especially cautious?
So I think retirees should always be cautious when it comes to their retirement, but I also think that they should kind of divvy it up in the buckets too. These are dollars that I plan on using in the next 1 to 3 years. These are dollars that I'm planning on using maybe over the next 5 to 10 years, and maybe these are dollars that I'm either never going to use, or I'm using for maybe healthcare later on in life, or I want to pass this to the next generation, right? Like my emergency fund type stuff. Each one of those tranches of dollars should be invested slightly different. And so when I say invested slightly different, they should also carry slightly different risk.
Okay, good to know there. There are some rules of thumb that people use, like 100 minus your age for
Absolutely.
Stock allocation, or of course the classic, 60-40 portfolio. Do those still work now?
It's a good starting point, but the problem with it is it's not personalized. Every household that we sit down with has different goals, needs, and wants. I think it is an incredible starting point, but from there, it's going to have to deviate to help answer your individual questions or goals with your retirement.
So bottom line, would you say the right amount of risk really depends on the individual person?
It should depend on each individual person, but the other thing that I would recommend is that if you actually sit down and take a look at risk, you shouldn't have the same amount of risk across all of your portfolios, because portfolios are taxed differently. You should have different layers of risk depending on how the portfolio is taxed, because that'll help you maximize those dollars inside retirement.
Very good. I know that's what you guys and your team are here for. If people are listening into this interview today and this is really speaking to them, how can you guys help?
I think in this day and age, the easiest way to contact us is on our website, burnsestatePlanning.com. It'll give you a lot of great resources. It'll also give you some great information so that when you do make that call or sit down with us, you can come prepared with what that first or second meeting is going to look like.
Wonderful. Well, Chris, again, thank you so much for being here today. If you'd like to learn more, we'll have this full interview and a link with Burns posted on our website at fox10tv.com. Thank you.
Thank you.